So let's talk about a technique of buying an apartment building with no money down. It's Richard Geller, and there's a magic question that will just open doors for you. And I'm going to talk about that, and it's really going to reveal something you may not have ever heard about. So we'll talk about buying with no money down. Sometimes you have to borrow your down payment, or you have to borrow your equity, and no one will lend you directly the entire full amount to buy an apartment building. Usually they're going to lend you part of it and require you to get a loan for part of it from somewhere else, or equity from someone else. So sources of that can be banks, it could be private money, it could be hard money. Banks are generally tough to deal with unless you have an account already with the bank and have cash in the bank. There's private money, there's hedge fund money, there's private equity funds. Generally, those are harder to get unless you have a lot of experience with a similar apartment, and if you have a track record, then you can raise that kind of money. Hard money is generally lent by private investors for a high interest rate, and it will only be lent on the hard asset values of the underlying asset. So generally, they're not going to lend you the final 10, 20, 30% piece of an apartment you want to buy, but there is a way of doing it. There's many ways of doing it. The best source of money when you want to buy an apartment building with no money down, the best source for your down payment are the sellers. Seller financing, there's no credit requirements, but it has to make sense for the seller. And there are various reasons why a seller wants to finance. Obviously, if they're very desperate, then they may want to finance, but a lot of times there's other reasons they may want to finance. For example, the seller may have a need to invest their capital. If they sell the apartment building, they have this money that has to be invested. They may not know where to invest it. It's a tough problem. They may want to defer taxes, and in some cases, seller financing can help the seller defer taxes. Or they may want income. Sometimes if they're going to invest their money that they've raised from selling the apartment building, let's say in bonds right now, they may only get 3%, and they may not be able to live on that. Certificates of deposit are paying 1 or 2% right now. So they may want to do this for income. They may want to have a loan with you for income. So those are various reasons that make perfect sense for sellers to do seller financing. Terms are flexible. They could be interest only, where then after a period of time the entire balance is due. Sometimes you want to get a seller to finance a note where you don't pay them anything. So in that case, you want to have interest accruing, but it accrues to the balance, so it's payable at the end. That can help you because your cash flow is not affected by the loan because there's no payments, but the seller is still getting interest. Another one that's very common is fully amortizing. Let's say a 10-year note with payments of principal interest. By the 10th year, by the 12th month of the 10th year, it's all paid off. That's what we mean by amortizing fully. But a lot of times they don't want to wait that long. So you may do something like it's a 30-year loan. So it's going to be principal and interest for 30 years, but it's due in full in 3 years. That's called a 30 due in 3. Or it'll be a 30-year loan that in 10 years you have to pay off whatever the balance is. That's a 30 due in 10. That's very common in this world. And there's one magic question that will let you get a note from the seller and will let you get additional financing. That's very important because sometimes when you get a seller to finance the purchase of an apartment building, you're also going to need to put additional money into it, like for rehabbing the building or for working capital requirements, for repairs, or for additional construction. And if you get a seller to finance you, and you have to go to the bank and then you have to pay off that loan that the seller gave you to get a new one, what the good is it? So there's a magic question which really opens doors. Will you subordinate? That means that their loan that may be a first right now, but if you get a new loan, becomes a second, or if it's a second loan, it'll become a third. In other words, it automatically becomes junior or subordinate to any new financing that you get. Now, if you're going to do this, you should definitely have a lawyer, a real estate lawyer, help you with this. The terms and everything are complex. Will you subordinate is a magic question that can let you buy apartments with no money down quite often. And there's no new paperwork. If you get a new loan, you just have to sign the new loan. But the old loan now automatically becomes junior to the loan you just got. It's amazing how valuable this can be. The advantages are it lets you get in with little or nothing down. You can get a new loan like private money, construction, or hard money without extinguishing the seller financing. It's very flexible. If you think this has been helpful, visit commercialfundingmillions.org. Opt in for new videos that I'm coming out with and learn how to make money in today's commercial crash. Thank you very much. Talk to you soon. Bye.